Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin. I say minutes, it could be considerably longer, we have a lot to go over today. And we're going to look at the bullish and bearish cases and the rather sideways confusing correction we're in at the moment on the shorter term and try and make sense of it. But before we get into all of that, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3 for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you have chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening guys, and now back to the video. Okay, welcome back guys. Right then, I've kind of been not looking forward to this video much, to be absolutely honest with you. Not because I don't enjoy making videos for YouTube or for my patrons. We had a good discussion on the live stream last week. Bitcoin was part of that discussion. But we end up in situations occasionally where we're just in a state of flux. We're just undecided. Okay, and we're in one of those moments now. There's lots of invalidation points, there's lots of points at which things will become clear, and some of them are very close to us right now, and by the time you view this video, things may have already simplified to some degree. However, at the moment, everything that we're doing on the longer term is being decided here, in the shorter term. And the resolution of this, one way or the other, will greatly increase the probability of certain counts and completely stop the probability of others. That's just the way it is. So what I want to do is I just want to start with some basic levels and prices we can all watch before getting into all the minutiae detail of the Elliott Wave counts, which are all probability based and could go either way at the moment. So let's go back to some classical analysis first, and then we'll dig through the Elliott Wave counts. Okay. Right, so let's turn off the Elliott Wave counts. I'm going to start by bringing up this Confluence folder, which I brought up multiple times before. We don't need all of the bits in it. Okay, and we don't need that. Let's bring up our moving average ribbon. We don't need all of these either. And let's just do some basic technical analysis first. So, what has Bitcoin done since the high at 69,000 and the previous high at 65,000? Well, in case you're new to the channel, this is an opportunity for me to just explain things in the simplest way possible. If you are a regular viewer and you've been through this before with me, I will timestamp this video. You can skip this and get into the counts later on in the video and get whatever information you want. But I want to try and be thorough, but try at the same time to break things down and keep them as simple as possible. Okay. A free wave move that's now complete. That's the bullish interpretation. Whether we count it as free from here and we say W, X, Y, okay, or whether we do something else potentially more bullish, such as a 1 into a 2, into a 1, into a 2, into a 1, into a 2, and we're going to build a huge extension and just moon from here. That's the simplest way of looking at the bullish counts. Okay, now what have we got on the side of that? Well, we've got a measurement here which is equal to a measurement here, so this later move perfectly matches the length of this 1-to-1 in linear scale. If we take that measurement and let's just get this out of the way, and we join these pivots together, we get a parallel channel. And as you can see, this parallel channel has gone from point to point with a little perfect retest here to point to point. Okay, and then we've bounced. We had a death cross which between the 60 EMA and the 250, which are the moving averages I use, and in my practice this is synonymous with finding a low. Not necessarily a bottom, but it happens it either happens around the day it happens, or it happens within a few days. And we can see we get that death cross, and then we get this low. This low also touches the edge of the regression channel, which touches a perfect 1-to-1 measurement and the parallel channel as well. Everything is in place to bounce, and that's exactly what we do. Everything started to go a little bit wrong, and I mean wrong in terms of not getting a nice simple solution, when we failed to get a clear 5-wave move out of here. A clear 5-wave move out of here would have been a godsend. It would have simplified everything, because at that point we've got a confirmed impulse which is either a 1 or it's an A, and that keeps things super duper simple. That didn't happen. The count has become convoluted and messy and unclear from that point. Now what we can see is the 250 exponential moving average here, as well as the 60 on previous occasions, are the two main areas of support for moving averages, I think, from the day time frame. I think they're very accurate, hence why I use them. So look, we have a crossover here, the 60 back over the 250, which provided support. We have bodying above the 60 level here, bodying above the 250 here, and we have a move back to the 250 here, and we seem to have tested the area twice. Once the second time pretty much to the tick and gotten rejected. So as you can see, although we've gone 1-to-1, and although we're channeling, we are below these major moving averages, and we would need to get above them to confirm or to give any chance of a more bullish scenario playing out. So at the moment, price is looking weak in the shorter term. Longer term, it looks like it may have done enough. Shorter term is looking a little unconvincing. Now if we bring up another folder here, which is our base support and resistance, we can see that the 250 exponential moving average happens to coincide perfectly with this level here, and these price tags I use are there for people who aren't necessarily looking at multiple 4K monitors. They're looking at their phone, so they can't necessarily see that it says here 45407.67 on the side, but they can see this nice big tag here. I can't get it all the way accurate because I have to come into a much smaller time frame, but 45436.32 is close enough. As you can see, this has been price support around here as well, and around these levels here before breaking down, and then it's become resistance, and it happens to coincide with the 250 as well. So keeping things super simple, a break above this level without making a lower low, so this low stays intact, okay, a move through this level, and that will simplify things greatly. Okay, and that's what we're kind of hoping to see. If we want a bullish case to play out, or if we want another scenario, which is the triangle, which we're going to look at in a little while, if we want that to play out, we're going to need to get through this level. Now, let's keep things also super simple. Let's bring up some other support levels here. Okay, this 1-to-1 level at 329.10.81. This happens to be the invalidation point for any bullish interpretation off of that low. So if we're saying 1 and then we're expecting 3 into a 2, If we break that level, 32910.81, we break that level, then it's not bullish. End of story. Right? Then we're likely coming down lower. So we've already got a range between 45436.32 and 32910.81. While we're here and price action is still establishing what it's doing, we're in a state of flux. And move back above these major moving averages, and move back above this level, an impulsive move out of here, positive. A breakdown through this level, negative. That's the simplest way we can look at it, unless you're short, in which case it's positive, unless you're short this way, in which case it's negative. So you take my point. Bullish invalidation back here at the low well, it depends where you're counting it from. Actually, we should, if we're going to give the benefit of a doubt to the lowest possible place we can count this, we'll put it here. It's probably where it should have been in the first place. I may have misplaced that. So the low all the way back here on the 22nd of June 21, 28638.65. If that breaks any bullish interpretation that we have, okay, whether it's 1212, whether it's 3412, okay, that's all gone. So as you can see, we're not a million miles away. It may feel like a long way, but we're really not a million miles away. It's 10 grand. Sounds like a lot, but in an asset like Bitcoin, it's really not. Okay, so break of this level, it's just bad news from any bullish perspective. And honestly, a break of this channel and the one-to-one relationship we've already established, that's bad news. Right, so we've isolated the 250 of this support here, the parallel channel we're working with, and the one-to-one are all providing support. But there are other things as well in play which are longer term and just as powerful, if not more so. Now let me show you what I mean by that. If we bring up our pitchfork folder, which is here, and we bring up our primary pitchfork, the confluence of this thing is staggering, in my opinion, absolutely staggering. They often are, but in this case, beautifully technical. So we have the pivot here that we're saying is 1 2. So whether we're saying 1 2 3 4 5 topped 1 2 1 2 1 2 1 2, insanely bullish extension, 1 2 3 4 1 2, and off we go into a 5, right, all blah 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 blah. The point is, when we come up here and look at this thing, we can see how we've gone from golden zone to golden zone with a big swing in between. Right, that swing has respected levels like 23.6, the 61.8, okay, the median line 23.6, 23.6, 23.6, 38.2, 38.2, golden ratio 61.8, golden ratio 61.8, and again today the golden ratio at 61.8. Right, so this thing's in play as well. So there's so much confluence at the moment keeping us in this range, right, that if it breaks one way or t'other, we start to get a lot more clarity, and it's going to happen. All right, it's going to happen. We're just at a point at the moment where we just can't point at it and go, that's the most likely case now. So now that I've done all of that, and I've taken you through all of the basics for that, we can now start talking about the actual counts. Okay, and this is where things stop being as simple as we've made them, which is, support, resistance, price levels. And feel free to come back and watch this video again and absorb this part of the video where we're looking at these levels, okay, where we call off all the bullish counts, okay, and we look at these levels that are currently containing the price and everything else I've said, moving averages, so on and so forth. Feel free to come back and reabsorb that. But now we're going to move on and look at the various counts. Okay, actually, before we move on and look at the count and jump in the gun a little bit there, let's just have a look at our momentum indicators over different time frames. Okay, So let's just bring back our moving averages for a minute. We know that we're stuck below that 250, and we're still fundamentally looking weak. Right, we've got work to do. Right, we've mentioned that. RSI went from overbought, all of these overbought readings, and this huge bearish divergence which led to this correction, all the way to oversold down here. Didn't get a lower low, right? In price, got a higher low. Oversold reading, bounce. We spoke about all the things leading to the bounce: the one-to-one, the channel, the edge of the regression channel, the death cross, blah 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 blah. Since then, weak move, weak, not horribly weak, but weaker than we would like. No real violent push up into overbought conditions. Move back, and then we get a high within 90% in price, and you can't call it divergence because it's not higher highs in price and lower highs, but you can see it's weaker, right? Suggesting that it's part of something else, right? That's just an idea. Now, that could support the idea of that being 1, A, B, C into a 2, and we're going to talk about all that in a minute. But generally, weakening momentum over the shorter term. Now, we had bullish divergence on the lows with the MACD, not with the RSI. So let's just look at that. You can see from the lows here to the low here, lower lows, higher lows. Right, so positive. A push into positive momentum above the zero bound, and then back and forth, not really deciding either way where we want to go. Weak. Just feels a little weak, you know, and not very convincing at the moment. Now it could change. Let's come and have a look at the weekly time frame. We can see that we are not oversold yet on the weekly time frame, but we are cooling off. We're cooling off on the MACD here. We've seen it before here, and we're seeing it now. No crossover yet. We could still break down. The 60 exponential moving average is basically the 250 on the day time frame, and as you can see, it's strong resistance. Now, last week's candle, this big long wick to the upside, not a very positive sign. It was a lower high and a big long wick to the upside. Now, we've had some bullish looking candles before. We've got this like kind of spinning, well, kind of like a doji here with a longer bottom, and not quite a hammer, I don't think. Nothing which really sells you. On the daytime frame, looks a bit better. Okay, but still nothing particularly convincing. So the same feeling here overall. Breaking major support. There's a real conflict going on here, and that's the best way I can look at it. We had divergence on the weekly time frame between these two highs. Higher high, higher high, lower high, lower high. Same is true on the MACD here. Okay, but we look like we could be cooling off, so it's going to get decided sooner or later. And as you see, this level going forward for the rest of the video for all the counts is going to be absolutely pivotal. Finally, on the monthly time frame. Now, this seems to have shaken a few feathers, which is fine. We've had a crossover on the MACD here on the monthly time frame, and we're 3 months in to bearish momentum. Now, this has signalled much more severe corrections in the past. Okay, let's just log the chart for a moment. We can see that the one we had in 2018, we crossed over, had a big build up of bearish momentum, and then we crossed back over and crossed back over again and back up. Overall, a bearish sign. And we can see that on the monthly time frame, the 60 exponential moving average was tested during the previous bear market lows. December 18, January 19, and 2020. We could head back to the 60, just eyeballing it, and we've got counts that you're going to see which allow that. So from a basic technical analysis point of view, we looked at support resistance, we looked at the levels we want to see break or not break, depending on your bias. We looked at what looks like generally weaker momentum over the shorter term, and we've looked at how there are some bearish signals over the longer term. So now let's get back to the day chart And now we can get into the meat and gravy of all of the Elliott wave counts. Okay then, so a caveat before I continue. I honestly feel for the moment you will get more value from watching those first 10 minutes than you will from everything from this point. Now if you are an Elliottian and you want to be bored out of your mind, then we'll try and cover everything here, but I'm not going to obsess over it because we're in, like I've already mentioned, we're in this state of flux. Until this correction gets resolved, we don't know where we are. So just keeping it simple of low resistance, support resistance, okay, previous swing low, these levels here, and the prices that we mentioned, you're probably going to get more value from the analysis of whether or not we break these levels. Okay, I just wanted to get that out there because this could become a real headache what we're about to deal with. So we've got a lot to go through here now, and I will timestamp this. So I'm just going to go through each of the patterns, okay, and talk through them one at a time, and then we're going to arrange them in our menu at the end of the video in an order of probability, very loosely. Right then. So where shall we begin? Let's begin with the positive idea that we've completed. We don't need that big garish arrow there. Right then, so 1 to 1. Sorry, my Discord's going off and you're going to be getting annoyed with me because you're going to be thinking it's your Discord, so let's turn that off. Right then, and let's just bring that up as well. And I'm now under attack from text messages. Right then, so 3, 4, Bob's your uncle. 1, dodgiest, you know what? Flat is the only way we're getting into a 2 now. Right? Has to come in before 32951 spot 89. Has to do that. 1 into 2, bullish count still alive, off we go. Right. We'll look at this small area now to support this count, and then we'll come back and look at how it's supported correctly. Right, but this just literally just hangs on this. Break that level and this is bullshit. Right, and it feels like a big pile of BS at the moment, and this is just the mess, a bit of a mess that we've gotten ourselves into here with all these various permutations and possibilities. That's why I honestly feel sometimes I love Elliott Wave. I think it's a fantastic tool, but it's a tool in the box, and if it hinders more than helps, you should abandon it in favour of simpler analysis. I'm a stickler for saying that, and I do believe it's true. I do love it, but sometimes you get paralysis for analysis. So, completed 4 down here. Run it in a combination. Flat into a zigzag, joined by a zigzag in an X-way, bringing us to a completed 4. This brings us up in 5 waves. 1, A, B, C into a little flat of an A, zigzag into a B, and a 5 wave move down in a C for a running flat in a smaller 2. 1, 2. That's rare enough as it is, and it's messy enough as it is. 3, awful looking 4 into a teeny tiny 5. Right, and we end up with that ugly impulse wave I mentioned about. This gives us 1. 5 waves that operate and function as 3. Not exactly pretty either. A, B, C. Bringing us to a very deep 90% correction. Right. This made us suspect flat. A, B, C, 1, 2, 3, 4, 5. But the 5 never came because why would it? Don't want to make things easy for you. So that was now off the table as well. So we ended up with a 1, 2, 1, 2, 1, 2. Well, that didn't work either. This can't be a nesting structure to this. It's just no way. Okay. So the best I can make of it now is 5 into a 1, A, 90% retracement in a 3 wave B, and now we're getting 5 waves down in a C that has to complete prior to this 32951 spot 89, or this whole thing's is an enormous pile of bollocks. Alright, and that's 1 into 2. That's the bullish case for the bullish low here. And let's just remind ourselves that this also applies. Let's come out to the larger time frame for a moment, or to the chart. This applies to the idea of combination WXY, but it also applies to the idea of the bullish count 3, 4, 1, 2. So that would be 1, 2 again, you see. And it also applies to the uber bullish count of 1, 2, 1, 2, 1, 2. All of that very simply hinges on the level we just discussed. We can't come back and break this low. Can't come back and break that low. Now, which level did I put that in here? 32910. So there's 3 bullish counts there, which will all get evaporated if they go through that level. So let's just call that, part 1, because we've just looked at 3 bullish counts. We've looked at the smaller time frame of how we have to interpret it, and we know that if we break that level, they're all wrong. Nice and simple. So let's now move on and consider the bearish cases. Right. I'm going to be in danger of repeating myself here several times. So where do we want to go now? We've done the combo complete. Don't want that. That should go underneath there. So here's another idea. This has been my bearish primary. Right. We're still in the combination. My idea for this is that we're getting another push lower here, and it will bring us to the edge of the long-term pitchfork. That's been my suspicion. Let's just bring that up again. That all of these levels have been holding and testing, and the 61.8 has been holding and testing here, because we're going to have a flush down to the edge of the pitchfork. That will complete 3 into 4, nice big long time consuming sideways correction, and then off we go in the 5th. Okay. Now let's come in and have a look at how we can interpret the price action off of the low to support this idea. Now the other idea, which is also viable and still hinges on how we interpret this, is the idea that we had a cycle top here, completed 5, 3, 4, 5, W, X, Y, going significantly lower, I would suspect, but they both hinge on the same price action here. So let's deal with that now. Right, and there's a couple of ways of dealing with this. So we're going to come into here and we're going to have a look on the 1 hour and how to interpret this price action. My gut tells me that this is a cleaner 3 than a 5, but it ain't that much cleaner. This tells me, my gut tells me that this is a cleaner 5 than a 3, but it doesn't work followed by this. Right, now there is a way of looking at it, but I just don't like it, so we'll talk about all of them. The first one here is ABC into W, ABC into X, ABC into Y of the X, W, bum, 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 X complete, slightly truncated, right? Doesn't have to go beyond, but it's just a little weird that it didn't. And we're now impulsing down into a 1 of an A, or we're impulsing down into an A of a B of a C, depending on whether we're looking for the 4th or whether we're looking at that cycle wave top and we're going to come down in another vicious zigzag. Either way, we've got the same thing going on. These bearish counts all gain greater confidence, significantly so, with the expulsion, the termination, if I can find the sodding levels, of this one here. Going through this previous low, everything starts to increase in the bear's favour once we break that. Alright, so this is the simplest way I can get it to complete into an X, which is slightly truncated, but there may be alternative ways of doing it, so let's consider that now. Here's a triangle X wave. Right, it's the same gig of W eventually into X and then that zigzag lower, taking out this level, cancelling out the bullish counts, but giving us longer time mucking about to do it. So now we get 3 into 3, explanation for this 3, then another 3, then another 3, and then we continue, and we've gone triangle WX. Okay, that's the way I see those two options at the moment. I don't see an alternative way other than this. Okay, this is the final way we get down through these lows. We had an ABC into a very small X. So X isn't here and it isn't going to be over here in a triangle. It was over in a flash. And we came over in 3. Right, into our X wave. And then we're going to go 1, 2, 3, 4, 5 into 1 or A. If we're going into the 4th to complete, that would likely be A. If we top down in a cycle wave top, it would likely be 1. You see the difference? Now I told you this was going to be complicated. A, B, C, fucking stupidly fast zigzag into a 90% retracement for a 2. So that's that. Yes, it's still legal. We didn't make a new high. So now we're coming down 1, 2, 3, 4, 5. And we'll break this level. And once again, this will be 5 into a 1 or 5 into an A, depending again on whether we're making the shorter term zigzag into the completion of the 4th wave at primary degree, or we're making we've done a cycle wave top and we're coming down violently to go much slower. So they're the ways I can see getting that X wave complete. The simplest one is that it's done with a slightly short Y that didn't go beyond the W, and we're just going to come down now and get this done. Right? I'd have to probably rate that as the primary for the fact that it gives me the least headaches. Okay, so we've now done bullish and we've now done bearish. We either bottomed and we're going moon, or we haven't bottomed yet and must go lower, significantly so or slightly more. So now let's look at the what's behind door number 3, which is the triangle. And this is like a zombie, which every time you like shut the door on it, you know, you think it's gone away, but you open the door and it's still just stood there looking at you, gormlessly, not really knowing whether it should come in or go away. And it's just, this is the thing which won't necessarily make itself clear until we see some further upside. So here's the triangle. What have we got here to support the triangle? Well, first of all, we've got a nice clear zigzag here and a nice clear zigzag here. We now have a way, because of our 5 for our impulsive wave into a 1 into a 2, we have a way of making this an A. That was always an option. But then we went 3 and failed to get 5, so we started to get a little annoyed. And we didn't get the flat because we didn't get the 5 either. And we can't have a flat in a triangle anyway. So what we're left with is 5 into A, B, C, D, E, triangle A, B, 5 into C to get D. So the triangle pattern supports this. The triangle within the triangle, but it's not a triangle. Fucking hell. It's not a triangle within a triangle, if you get what I mean. It's a triangle within the B wave of a zigzag. Of a D. And then you're going to get an E, and then we're going to finally get out of this. So nice and simple. What do we want to see if this is correct? Well, once again, that multiple invalidation level here, 32969.55. It may have been slightly different when I was looking at it, but it's this low. We don't want this low to break. Okay, what do we want to see to give us more confidence? Well, we want to see the 250 moving average, which is sloping down with the triangle. We want to see that break. Okay, we want to see the long-term pitchfork 38.2 here, which we're channeling into. We want to see that break. Okay, then next we want to see this level 45436 spot 32 break. In other words, going right back to the start of the video, we want the resistance that was previous support, the moving average which is providing resistance, this level that's providing resistance, the 38.2 and the pitchfork that's providing resistance. We want that to bloody break. Okay, and then so we'll carry on mucking about and then we'll come out through there if that's right. If we break down bullish, then it's the bullish cases are dead anyway. The triangle is completely dead below the low back in June 21. That's one caveat I will make. The triangle's still technically possible for as long as that low back here at June 21 hold. So let's just add that into the folder because that's another caveat there. And if I'm sounding frustrated, I'm honestly not frustrated from a trading perspective. I feel that in these circumstances, as I've said to all of my members before in the live stream, which is if I get myself into a muddle on something, I'm not trying to trade it anyway. There's hundreds of thousands of assets out there to go and trade, so go and trade them instead. Wait for things to clear up. Wait for a trade setup to occur. 5 forward, 3 back, golden corner maybe, 50, whatever. Positive momentum, increased volume, all the things we look for, then take it. But at the moment, I'm not interested in getting chopped up to pieces inside of here. It's of no benefit to anybody at the moment. Alright. So there's your triangle invalidation all the way back here. It becomes very unlikely if we break that previous low, which I've now mentioned several times. There it is again. Now that's the triangle. So I now think I've covered all of the various counts. Okay, so let's try now to just sum things up as simply as we possibly can. We're going to go back pretty much to where we began at the start of the video. The bullish counts that we've covered: 1 2 1 2 1 2, 3 into 4 as a combination, 3 into 4 1 and 2, whatever. All the bullish counts that we've covered here, they all hang on this level sustaining. That's it. You break that and it's good news bears. Okay, now I think actually, bear with me one moment, switch off of that. That's not the exact level. Now where have I put that again? I've got to pull it somewhere, haven't I? Did I put it in the bearish, in the bullish folder? No, that would have been too simple. There it is, sorry. 32,951 spot 89. Right, your bullish counts, whether it's 3 into 4 into 1 into 2, whether it's 1 into 2 1 into 2 1 into 2, right, they all die there. Go through that, so we can scrub them all if we break that level. All the bearish counts all pick up confidence below that level. Incomplete WXY into a wave 4, cycle wave top into a deeper double combination, right, that picks up confidence, breaking that previous level. The triangle, break the same bullish level we were just speaking about, lowers the probability of it occurring. The triangle invalidation is back here at 28619 spot 94. That's as simple as it is at the moment. We're trading in a range between this and this, and once we get out of it, everything gets simpler, bullish or bearish, but it is currently a little unclear as to how we do it. So that is the best I've got for you at the moment, guys, and I hope you found it helpful. I really do. But if you haven't, and I know I can sound like a broken record, don't try and trade something that you don't have any confidence or conviction in what's happening. Right? Elliott Wave is a great tool and it's brilliant for looking at longer term counts, but you can't rely on it to tell you what you're doing and when you're doing it. Okay? Go and find something which looks better, just my advice, or wait for the setup here for a trade entrance, to enter a trade to set up. Now we talked about that on the Patreon so many times, you all know what I'm talking about and you all recognise it when you see it. Okay, we don't need 100% conviction in Elliott Wave to make that decision, we just need enough conviction to make the decision. Okay, if you understand what I'm saying. So alright then, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up. And yeah, if you're not following me on Twitter yet either, there's a link in the description box below. I always post on Twitter just as a means of notifying people whenever I upload a new video to YouTube. Alright guys, take care of yourselves, and I'll be back with you later in the week. All the best. Bye bye.